All right, welcome back, traders. It is Thursday, March 7th, 2024. We're back. Didn't do a video last night. Main reason, we didn't do anything really yesterday. Didn't close any trades. We did put a couple things on, but really the great thing about having strategies that are longer term and not relying on the need to jump in and day trade, zero DTE, whatever you may be doing, short-term weekly trades. When you don't have any of that, your life gets pretty easy. If you want to take a day and just really not look at the markets a whole lot, you can take kind of the day off a little bit. Didn't really take the day off because we're always in the Discord interacting with members, but I took a day off really from trading yesterday. And I'll be frank with you, today, I really didn't even look at the account much either. So unless I was asked a question, I didn't even check my account. So one of the beautiful things about trading with a strategy that's typically longer term, most of mine are 90 to 120 DTE strategies, some at 60, but if you're talking 60 to 120 days, you don't have to sit there glued to your screen every single day waiting for something to happen. The only time you really got to take a look at something is on a daily quick check. If something's started to heat up in the loss category, all right, now I got to watch it a little bit to see if we are going to get stopped out on something, which doesn't happen a whole lot when you're trading high probability strength strategies, but it does at times. We had one earlier in the week, and that was it. So we're back on track, and the account's doing just fine. So let's jump into the account first. Then we're going to take a look at the markets, and then we're going to talk a little bit more about trading as a business versus trading as a hobby. Kind of continue on that discussion that we had the other day. So let me share my screen. Let's pop back into our trade tracker for the week. Let me get my face off the screen for you. Let's take a look at where we ended the day. So the markets ended the day up pretty significantly today. So big move up on the session, which pushed our deltas down overall on the portfolio. We're sitting at minus 228, again, 0.05, not even registering on the scale. I like the fact that I'm negative delta right now with the markets hitting highs, all-time highs, and being in overbought territory. Doesn't mean we can't stay there, but I like my deltas exactly where they are, mainly due to the fact that I have a good number of hedges on at this point in time. So I'm hedged pretty well from what I consider. Here, all right, theta 1190. So our theta has actually moved up. It's the best theta reading we've had in a while. Volatility really didn't do a whole lot of anything today. VIX was actually down on the session, but overall our theta bumped up just a fraction, sitting at 0.27, which is really not bad for where we are. We finished the day at 434, 592, down just a fraction from the previous two sessions or so there, mainly due to our hedges and our naked calls that we have sitting out there. So those are taking a little bit more heat than normal on things, and our hedges are nearly at full losses right now, whether it's 21-day hedges out, some hedges that expire in 3 weeks, some hedges expire in 4 weeks. And I've got another one in 54 days. They're all down. The more recent ones, they're down almost 90-some% on most hedges. So the market keeps going up. Hedges keep going down. It's the nature of the beast, but you got to be hedged and you got to be smart. All right, so let's take a look at what else is going on. Since we haven't closed any trades for 2 days, there's really nothing to report in here. We are just down a bit for the week because of the gold strangle that we ended up taking off earlier this week. That's mainly the why we're down. But if we look really at strangles overall, still one of my very favorite trades. Strangle trades up 12,709. And one of the things I did today, we had a good strangle discussion in the group. So if you want to see more about that, take a look at our Discord in the main chat. And you can see a pretty good strangle discussion, some really good stuff from some of our members. Love the fact that the members are really engaged and doing some research. But one of the things too, if I look at my pivot table, and quickly what I did was I just sorted this just for strangles only. So you can see on the year, right now, we've had 18 trades, 17 winners, 1 loser. That loser was a gold strangle. Overall, we're up 12,709. So it's our third best performing piece, but it's doing really, really well considering that it's the least amount of buying power of any of our trades, and yet it's only fractionally behind really where we are. Well, it's ahead of the long-term 112 because we have not sized these up appropriately yet. We'll take a look. At some point, we're going to get close to taking some new ones off. Those would be the Aprils, but right now those are only in the 80s, high 80s. So nothing to do there. But we'll be closing a couple this month, and these will be, one of them will be our kind of our typical size that we've been doing, which should generate about $2,600 in cash. Another one is the newer increased size, which should generate around $4,000 in cash. So hopefully we're going to generate about $6,000 this month here as we continue to move up. But strangles overall doing really, really well. One of the things that you notice here, and when I notice back down here, is what's missing here. You've got oil strangles up $4,000. We've closed 3 winners. You've got gold strangles. We've closed 6 gold strangles for $66.80. So right now, gold has been, we've had the most strangles. Yes, we did. Did we take one loss? We certainly did. Wiped out a good chunk of that, but we've started to size up on them. So I think we'll be in good shape. But overall, I mean, you lose 1 out of 6, still have a positive win on that. Copper strangles, we've had 4 of those. Other futures that we've had on, I think that was live cattle. And then ZB, we've had 3 strangles close so far. And we're sitting on a whole bunch more strangles as we look at it here in our account. We've got 4 more strangles working. We've got oil, bonds, copper, and the Aussie dollar. But overall, great strategy. It's been working really well. I've lost 1 out of 18 so far. So it's a pretty good win rate when you take a look at it. 1 divided by 18 is about 6%. So we're at a 94% win rate on strangles. And I think it helps to be diversified. But one thing that stands out, and you can see it here, or you can look at it on the dashboard, either way, when you're looking at these totals, is there's no ES strangles. I have not traded strangles on ES this year. And one of my strangle trading rules is that I'm going to trade strangles when I'm closer to the 21 EMAs. We do this every single night out here. I like to be in between the ATR bands. I'd like to be near the 21 EMA, and I like to see some divergence between weekly and daily. So does it really matter? In the end, no. They're just probability trades. And if you're putting them on, you've got X amount of probability that you're going to be, that you're going to have winners. If you stay to the mechanics, they've back tested extremely well at a 90, 91% win rate on ES. I've just held off a bit simply because when the market is just going straight up, and this is not like a 45-degree angle, we are talking like a 70 some odd degree angle higher that this market is going. It's parabolic in nature right now, and the Fed is not cutting rates, and the market is still going up. So this whole thing is bananas, but no ES trades this year. I think it's time to start to dive into those, but we're not quite ready yet. I'd like to see a little bit of a pullback before we do that. So let's take a look at the markets, but overall, we're doing great. Good shape for the year. Down a little bit this month, but we haven't really begun to close a whole lot of anything. And we've got some really good trades that are brewing. So let's get into the markets and take a quick look at what's available. If we look at SPY, again, S&P SPY was up 1% today, setting new all-time highs. So we can move our all-time high up now to 515.89. This thing just is unstoppable to the upside. We'll stretch out this upper band here. We'll stretch out this lower band here as well. So you can see that this ascending wedge is getting tighter and tighter and tighter. We'll see. Do we break to the upside, which means just a continuation pattern? But when these things break to the downside, that's usually a pretty good selling sign. looking at the weekly chart on SPY, 8 is the typical longest. And let's go to a larger chart on the weekly, and let's go back. You've got to go back to like 2021 to look at a chart that maybe we were in in a weekly chart more than 6 or 7, 8 of the bars. Look at where we are here. Unprecedented. We've not been this high since really July of 20. So July of 2020, right after COVID, and we started to reverse higher. This was the highest reading that we had been at on the squeeze. One of the highest readings on MACD back there, but I just like to look at the squeeze from a size standpoint. But look at the RSI. Okay. Except for right before COVID, when we were significantly overbought and we had this dip, which was a pretty good warning sign that we were overbought to begin with on COVID, and then you drop down again. COVID, it's one of those rare events that typically don't happen, but you were looking at an RSI here somewhere around 80%. If we look at where RSI is right now, as of today, you are at 82%. This is the highest reading that I can find going back to somewhere in 2018. So the very beginning of 2018 here, this is the same level of RSI before we had a pretty precipitous plummet from that level. And it was still cranking up. It didn't even roll over. It ran down. In 2 weeks, the market sold off from 286 all the way to 253. Like a 30-point bump in 2 weeks at the bottom, which is almost a 10% decline in 2 weeks. And then if we take a look here, again, overbought at these same levels, pretty decent decline, came back, and then, COVID hit. If we take a look, last time it was overbought in here. We didn't drop a whole lot, but we did pull back a bit, got overbought, dropped a bit more, and then just kept on selling down. So right now, you're at all-time highs. Makes sense that RSI is going to be at highs, and it should be. It's exactly what we're looking at. But from a historical perspective, we have not seen the squeeze to this magnitude in years. We have not seen the RSI at this magnitude up in years. We have not seen this amount of divergence between some of these moving averages in a long, long time. Okay, you've got to date back all the way to November of 22. So a good chunk of 22 from like March through almost November. 221 EMA was really moving higher from the 50 EMA. And that's, again, what we're seeing right now in the market. So anyway, I wanted to just point out some historical. We are at historical levels on the weekly squeeze. Okay? We are at historical levels almost on the RSI on the weekly. Right? Those are not necessarily great things to hang your hat on, but we're hedged. We're prepared, I think, for hopefully a decent pullback coming soon. Take a quick look at IWM. To see where we are from a weekly standpoint. We've been moving higher on the week and moved higher again today. So good day up on the week so far. If we'll extend this line out, we just continue to move up. It's been in a nice bullish trend. Drop from down here, moving up. You can see we've hit it like 3 times on here. So it's a nice bullish trend that we have going. Maybe you're getting a bit of a resistance level in here, which could be setting up for an ascending wedge. However, MACD is starting to, just move sideways. RSI a bit sideways. It squeeze, losing a little bit of momentum. And again, we're overbought, or not overbought, but we're overdone on the squeeze. Doesn't mean it can't continue, because it can move up, down, and just move sideways. And we're not at oversold levels on the 3 ATR versus the SPY. We are way above the 3 ATR, and we've been above it, but the 3 ATR is just moving up in tandem, top and bottom. So kind of discount it, but we are remaining above it on the weekly. Qs, same type of setup here. Having a little bit more of a pullback during the week, and it did rally back today. So we, continue to rally back. Keep it moving this thing up. So as we look at this uptrend line, we're still hanging on to it. RSI is moving higher, squeeze in a squeeze. So overall, looks pretty good on the Qs to maybe continue. And this could be a decent ascending triangle pattern that we have here. If we break the highs from today, tomorrow, this thing could again be off to the races on NASDAQ. Take a quick look at the put call ratio. We haven't checked in on this in a while. Let's take a look at the put call using the 10-day moving average. As long as this thing is in a declining state, which it is, okay, the markets are going to continue to move higher, which they are. Okay, so declining 10-day moving average, okay, here, and ascending S&P until this thing, we're narrow, we're hitting where the lows were back here before the market started to, a little sell-off, then righted itself, a little sell-off, then got its momentum back. Well, let's see what happens. If this thing really dips, I think below the 7, which is where we're back at now, if we can get below the 7 and we start to make this climb, then I think we can look for some kind of a pullback. Again, that was not a major pullback here. So you're only talking from 4,600 down to somewhere around 4,300 or so. So not even a 10% pullback on this move. Maybe a little bit more. More like 10, 15%, no, 10, 11% here from trough to peak. Now we're peak. We'll see where the trough is, but we're getting close to starting to set, to continue to keep going down. As this drops, market will keep going up. So we're waiting for a reversal on the put call ratio, which has not happened yet. All right, the VIX not doing much of anything. I don't think there's anything to really even look at here. VIX is dead, nothing happening there. The dollar getting creamed, has been just beaten up for 2 straight sessions. Significant down move. So as it broke out of this triangle pattern here, you saw it coming. Okay, broke out of the triangle pattern and really headed down as it broke these moving averages. So the dollar, take this off. The dollar just remains in a pretty substantial downtrend here. We'll keep an eye on it, but where does it stop? I don't know. The weekly starting to tip over RSI, but not the squeeze or the MACD. So neither one of them is terrible here. Will the dollar find some sort of support in these areas? Again, I don't know that technical is the best thing to do, except give you a sense of what's happening on the dollar. Well, it's dropping precipitously out there. If we take a look at the 10-year Treasury yields, you are in this descending triangle pattern. Okay, we're heading lower in this pattern. Now today, it did, it still went down, finished off of its lows, but MACD falling, RSI falling, squeeze is falling. Everything points lower here, which gives us hope that the bonds are going to move themselves higher. And take a look at the RSP as well, just to get a sense of where the equal weighted S&P is. And just like everything else, this thing is in overbought territory. Squeeze, maybe falling over. Let's see what happens. We'll keep an eye on how this reacts compared to some others. All right, quickly. ES, we've already talked about. the S&P and ES in this ascending wedge pattern. We'll see what happens. We're overbought weekly. Maybe we'll get a little tip over on this week. So if we get any kind of a pullback next week, maybe we finally start to, you're seeing little momentum on the weekly starting to slow it down. Okay. Big advance yesterday or today for the most part. But we'll see if we continue. All right, oil. How does oil looking when everything is said and done? Oil remains in this mightily struggling, ascending wedge pattern. It just can't seem to break free. It's just, again, a lot of sideways movement on oil. You're a little bit above the 21 and the 50 on the weekly, and you're a little bit above, like a point or 2 points, 3 points above here, above the 21. So you're rising, but I think this thing doesn't set up too bad for some strangle activity. The weeklies, everything is rising. The daily things are starting to look lower on momentum. RSI kind of in the middle ground here, going sideways. That sets it up for some really nice strangles, I think, on oil. And if we gain some buying power, and we do have a strangle on oil right now, it's up 42% in 18 days. So I'm expecting that thing's going to come off in the next week or so, barring a major move. We've also got a new 111 trade on in oil, but I think oil, very good strangle opportunity right now. So ES, still not able to strangle this thing. You still just 111s, 112s, ratio spreads, naked puts, whatever, covered strangles. Okay. Gold, gigantic week last week, even more gigantic week this week, new all-time highs up here. So this thing just can, not necessarily all-time highs. Let's just go back a ways and take a look at gold itself. So let's take a quick look. So now you're sitting at these highs that we haven't seen in a long time. And let's see if we can crank a monthly up and go back maybe as far as we can. You know what? Let's do the time frame. Okay. So you can see that this same level, I almost want to pull it all the way back to here. Okay. So this high was somewhere around 2089. And we'll just make this 2089 as well. Okay. High, nice trough, another high, sold off, hit it again, sold off, hit it again, failed, finally popped here. So it took a long time, many, many years here, basically back to 2020, middle of 2020, same resistance level. It took a while to finally get through there. Well, we finally broke it. So we finally broke it 5 days ago, Monday, Tuesday, Wednesday, now Thursday. We'll see if gold has it in it to keep moving higher. But you can see on the daily, way above the 3 ATR. You can see that the moving averages are really opening up. They're stacked. Big, giant jumps in the PSAR from a bullish standpoint and very overbought here. So will MACD, is that potentially, can we see some plateau tomorrow in gold? Right now, it's too far away. It's above its 3 ATR. I'm not going to strangle that. I'd like to see a pullback maybe to the 21 EMA. If we can do that, then I think gold's back in strangle graces. But right now, no bueno. And if we look at RSI, with RSI sitting up here at 83, that's not strangleable to me. Let's take a look at, and there's nothing I'm going to do on gold right now. Just nothing. No trade that I want to put on gold. All right, let's take a look at ZB here. We already talked about rates. All right, so with rates moving down and lower, you've got bonds continuing to move higher. Now we're back up at the top of this channel that we've been in. So question now is, you've hit it. Can you break it and continue to move to the upside, or do we start to fold down? Now, MACD is rising, RSI has been rising, the squeeze is on and maybe starting to fire to the upside. So I think you have maybe potentially more upside in bonds to go. But if we look at the weekly, momentum's coming out on the squeeze. MACD, the momentum had been coming out until this week. And then RSI is getting a little bit of a movement, but still hanging around the 50. I like the fact that RSI is kind of flat and moving down a bit here. So we'll keep watching it, but we are very bullish on bonds overall. And bonds, we have a good number of trades on. We've got a 112 that's up 135%. We've got covered strangles that's up 90% in 11 days. I've got a regular strangle that's up 12%. We've got a ratio spread that's up 50% now in 4 days. I'd look to take that off potentially. We've also got a 112 trade on that's now up 30% in 3 days. So right now, bonds is probably my most profitable position that we have, and I'm going to continue to pound bonds. And if we get any pullback, we'll continue to write strangles, and we're going to continue to stay long bonds. Copper here has been in this sideways movement. So as we move in copper, big day today on copper. So a decent day yesterday, big move up in copper today. MACD, squeeze, everything's firing to the upside. Everything's firing to the upside on the weekly. We're hitting resistance here. If we break through this level, copper could really start to get cooking, which would not be great for our strangles in copper. So our copper strangles that we just put on are down just fractionally. But we do have a 112 in copper, which is up more than our strangles down. So our 112 in copper, which is 11 days old, is fantastic right now. I think this sets up well for some more 112, 111 trades on copper. All right, and then let's take a quick look at Aussie dollar, since this thing is moving its way higher. It's had a couple pretty good days in a row. So yesterday, big move up. Today, another big move up with the dollar. 2 giant moves down, 6A. 2 giant moves up and moving up a little bit more in the after hours right now. So this thing is just switched from bearish to bullish PSAR. Everything stacked and breaking through a squeeze. You could really see 6A starting to move now. And if we're looking at the weekly, though, the momentum has been down and PSAR is still down, and we're still close to the 21 EMA. So I'm still fine with where we are. Let's let copper get its little move here, and then hopefully it'll chill out for a bit. Again, hope is not a trading strategy, but it gives us something to look for, and I think that's where we're going to hang our hat. All right, so there's where we are. Lots of trade ideas for tomorrow. And let's just finish today quickly. We talked yesterday about trading as a business versus a hobby. We talked about the mindset and attitude. Not sure if we really covered objectives and goals, but for hobby traders, objectives are less clear-cut, focus more on just the process of trading itself as opposed to achieving specific incomes. Most hobby traders, they're just trying to make some money and they really don't have a plan, and they're just focused on getting some trades and not really having specific targets. Business traders, or people trading as a business, they've got clear, well-defined objectives. They've got specific, measurable, achievable goals and a clear understanding of the risks that are involved. So they're treating it, again, as a full-blown business, not a hobby. And when you look at the commitment and time investment involved as well, hobby traders engage in the market sporadically without a consistent schedule. You're in, you're out. You take a couple of days, you're in, you're out. Okay? Maybe on your free time or at lunchtime, and they're just doing some trading. Business traders, or people trading as a business here, they've got the time commitment in here. This is a full or a professional part-time job for them, allocating a lot of specific hours to research, trading, reviewing strategies, investing in education to improve their trading skills, of having a very systematic approach to engaging with the market. From a financial and risk management standpoint, okay, hobby traders, probably more casual, less emphasis on risk management or record keeping, probably not even tracking their trades at all. And then business traders, risk management are the cornerstones of trading. You've got to manage your risk. Great record keeping, having a risk management plan, careful capital allocation, reviewing your performance against your targets, treating it as if you were the CFO of a company and reviewing your financial reports, making sure your risk stays in line. And then the last thing here is the educational approach. Hobby traders, they may seek to learn and improve, but the approach to education and skill is probably less structured. You might pop in or sign up for a course here or there, and you try something, and then you just jump out of it. You jump in, we see it all the time. People jump into the Discord, stay for a month, and they leave. Some people stay for a month, try to take everything, and go start their own little Discord, okay, which is all good. Or they may just pop in, take a few things, and think they can do it on their own. And what they miss is the subtle learning and educational approach. We see people come and go all the time. Oftentimes they'll go to someone else's Discord or trading group. It's not for them. They'll come back to our group or whatever group maybe they feel fits their needs. So they really look for the next big thing and they just follow other people's trades. Business traders, people trading as a business, continuous education and skill enhancement are integral to the business approach. Formal education, okay, signing up for courses, joining a group, joining quality trade groups, signing up for mentorships, attending seminars, continuously refining your strategy. Okay? Not people trying to go 100 miles an hour, not people with FOMO chasing the holy grail, not people necessarily with high activity levels, okay, or taking massive risks. Our Discord is really for solid, slow, semi-boring trades, okay, that are going to consistently drive income over time. Okay, that's our goal. Consistent, solid, slow, and even a little boring at times. Okay. If you start to speed up and start to chase people and they're day trading and anything else that they may be doing, and there's good people out there making good money. And we'll do a little zero DTE, and we've got some members doing some day trading. They're doing fantastic at it. It's all good. What you got to make sure is that for you? Does that fit your style? So overall, hobby trading can be enjoyable and somewhat profitable, but trading as a business involves a lot more disciplined approach, a professional approach. And if you're going to transition from a hobby to a business, it really requires a big mindset shift. Okay? You can't be the gunslinger. You can't be skipping around. You've got to increase your commitment. You've got to look for long-term success, and you've got to really look for those trades and strategies that are going to be successful long-term. Doesn't mean you can't make a little money in between with some great spec trades and some day trading stuff, but you really want something solid, potentially a little slower, organized, that makes you money. All right. So hopefully this was helpful. If you like this, click the like button, please. Let's see how many likes we can get today. I'd really love to see 200 likes on this video. I know it's a long one. Let's see if we can help some people out. You can help me out by giving me some of those likes as well. And we can get the word out to more people. If you're not a subscriber to the channel, what are you waiting for? Subscribe to the YouTube channel so we can give you great content consistently out there. And if you want to see what we're doing in the Discord, go ahead and join up with that. Links down below in the description. You can use KING as a $50 off the first month service. Give us a try. Decide if you want to stay long-term as a committed trader who wants to invest in themselves and their education, or if you want to just keep skipping around and trying everybody out and see which be a Goldilocks type of trader and figure out which one you want. Either way, it's all good. I want you to be happy. I want you to be profitable. And we'll see you guys tomorrow. Last day of the week. Let's have a great day. Take care. Bye.